Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another jam-packed daily cryptocurrency market update. I hope you're all having a wonderful week so far. And if you are new to my channel, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the cryptocurrency space, but also the broader markets. And a large part of what we're going to be doing today is looking at the broader markets and bringing the cryptocurrency market, Bitcoin, into it. We have looked at the potential for this right shoulder, the low of the right shoulder, to now be in. And we had confluence not just on the Bitcoin versus the dollar chart, but also Bitcoin against other assets out there. I don't even know if you can call the dollar an asset. It's becoming more and more of a liability at this point. But we are going to be looking at that. We're going to be looking at how the economic data that we've had thus far and that we're going to continue to get is going to factor into that and potentially play a role in the cryptocurrency market. You guys will know that we are bulls. We've been accumulating crypto since the start of 2023 when we assessed there was a fundamental shift for Bitcoin taking place and the broader markets in the macro direction. And we've been very right on that, getting stocks exceptionally right last year. And of course, closing the year up very, very well in regards to our crypto portfolio. And you guys want to unlock my crypto portfolio, do consider becoming a Patreon. I've just done a Patreon update this morning. And of course, that's following Sunday's weekly meeting. So you do get weekly meetings with me, 2 meetings a week. One of them is very much a technical one when you guys can ask me to take a look at some of your altcoins. And the other one is kind of a macro overview of things and where we're at and what our plan is. So enough of the shameless self-promotion. Let's dive into it all. And I'm really going to be starting things off by refreshing on this week and the kind of data that we have and how and what we're expecting in regards to this factoring into the market. So Monday was lackluster. You had Japanese unemployment rates. We didn't really expect much out of that. But today was a big one with the Eurozone GDP. Now, this was expected to come in at 0.1, minus 0.1 for the last quarter of 2023. And we said, actually, we think this is going to beat, and it has indeed done that. And this beating, if you look at the Dixie, and we're going to come on to Bitcoin in just a second, we know just how correlated Bitcoin is with the Dixie. And our broader thesis for the dollar that supports our reasoning for being bullish on the markets is basically to do with this channel that the Dixie's in. The Dixie's been in this channel since 2008 when we officially entered this kind of socialist regime, or perhaps more communist in nature, with governments now taking over money itself. And we know just how important money is to everybody's life. But we ultimately think that the Dixie is now coming down, and the adverse correlation of this, if we look at something like Bitcoin and the SPY, will be them going up. And we've got lots of very positive feedback from the markets. You can see dollar up, what we're kind of calling a basket of risk. We've only got 2 charts on here to demonstrate that. You know, you could add gold into it. You could even add bonds and housing. Even bonds and housing looks like they may have a short-term turn. You've got a kind of bullish divergence on those, but that's potentially for a whole nother video. We'll talk about debt in a second in regards to the Treasury's new marketing or marketable announcement in regards to spending. But you can see dollar up. You know, when did the markets turn? Well, when the dollar started to roll, and we expect broader continuation to the downside for the dollar. We know the short-term headwinds that we've ran into have essentially taken place with the dollar catching a bid. And this bid has been caught. Not only did Bitcoin run into key technical resistance, and then you got the buy the rumor, sell the news event in regards to the ETF approval and grayscale, but you also had macro headwinds in regards to a strong dollar. We now think that's about to roll. We did say that you're in a short-term downtrend. We don't want to see that invalidated. And ultimately, that meant not running the 0.14 mark. You can see dollar up, markets stagnant in regards to risk. And as the dollar's kind of topping, you can see the markets are kind of somewhat running. Remember, this is factoring into that right shoulder that we're forming. Once we form that right shoulder and we take that key neckline at around about 48,000, that could set us up in a broader pattern to 150,000. And we're going to look at that in just a second. But we do want the dollar to roll. Remember, the Dixie is largely pegged against the euro. Better than expected, and we've got the wrong chart on here, better than expected Eurozone inflation, which is good news. You've got a very heavy week in regards to data tomorrow. You've got the Fed's rate decision. They're not going to up them. I've seen people talking about a Fed pivot. The Fed aren't going to pivot just yet, and pivots aren't instantly bad. The real pivot in regards to them drastically lowering rates usually happens because something breaks. And we are basically saying that nothing's going to break until 2025, potentially onwards. You know, we expect this year to be and very much follow the plan that we've set out for it, and the dollar to continue to roll. So you've also got US ADPs, you've got Australian CPIs tomorrow, you've got Bank of England rate decision, you've got US jobless claims. we think you're going to get weaker than previous US data and potentially stronger than previous Euro data and other data that makes up the basket of the Dixie. And that's going to factor into the dollar coming down, and we know what that's going to mean for risk. So you've also got a lot of company earnings that we've also looked at. You've already got General Motors that have beat expectations. This was from Michael Brown. He's talking about Google and how essentially they've beaten expectations for 3 straight quarters. You've also got Microsoft, which has done a similar thing, now the largest stock in the world, and a number of others. So I think you're going to get better than expected data out of all these companies. And if you look at one reason, we'll dive over and get into Bitcoin now. So we'll take off the SPY and we'll take off Bitcoin before we jump to the Bitcoin chart. One reason that we were expecting this right shoulder to potentially be in is not only on this weekly candle, but we're also looking at where you were in relation to the likes of Bitcoin against the SPY. It's in a similar structure. It also had an inverse head and shoulders lower down. And you can see the sort of wick you had a lot closer to that left shoulder. You also had the NASDAQ against, or Bitcoin against the NASDAQ, Bitcoin against gold. And we're also looking at Bitcoin dominance, which we're expecting to roll in correlation with the bull market that we now believe you're in, and altcoins and how they're setting up on their own technical merit. But this is going to actually be bullish for Bitcoin, believe it or not, Bitcoin dominance rolling, and also even more bullish for altcoins. If Bitcoin dominance was going up, that would technically mean that altcoins are going down. And if Bitcoin dominance is going down, that means Bitcoin's doing well, because the altcoins necessarily wouldn't be without Bitcoin, but altcoins are just doing more. So there's a number of things that led us to believe this right shoulder was potentially in. The Market Sniper put a great tweet out yesterday. If you're not already following, we probably only follow really one other YouTube channel, and it happens to be the Crypto Snipers and of course the Market Sniper. He essentially was looking at a small term or a smaller time frame, and I'll just make sure you guys can see this pattern that was taking place for Bitcoin that could potentially see it run to the 4,005 or 45,000 range. Let's take a look at that, because this is smaller time frame technical analysis that supports the larger time frame technical analysis that we've looked at, that is supported by the kind of macro data that we think is going to come in and how that's going to impact the dollar. You know, we build this. I think when you look at the caliber of other economic, trading, investing content that's out there on YouTube, it's crap. It's really, really bad. And the reason being is because people are always, it's like they're drawn to shiny things, you know? They'll see a headline, they'll talk about, oh, we're going to crash, blah, 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 whatever, for unknown reasons. And if you look at those people that have been talking about the markets, you know, we were one of the very few people to fundamentally pivot and be bullish on the markets in 2023, whereas everyone was still expecting a crash. That's not happened. The market's basically giving us feedback and saying, you're right on this. Don't bet against that. But if we look at the smaller term timeframes, a little bit of a rant over, and we look at what the sniper's looking at, he is essentially looking at this structure here. So we did actually look at this, and we said, since you ran into that resistance, you have been in a short-term downtrend, which is just a concession of lower lows and lower highs. Simple technical analysis will beat all these BS signals and nonsense. But we did, for the first time, lower low, lower high, lower low, lower high, lower low. And then we put in a higher high and now a higher low. So we are potentially climbing our way out of this. And what Francis is looking at is this neckline here that actually centers around a very key level of technical significance, which was this inverse head and shoulders target that we were predicting in 2023 to take place. We made it. You then had a small continuation wind up that took you into a broader neckline. And now you're coming back and having a rest, which is very typical. Remember, if we do set this head and shoulders up, you could be looking at 150K Bitcoin. And we've just quoted and looked at some sort of macro reasons. But if this is a head and shoulders, you know, this is going to ultimately predict you to around about the 45,000 range, which ultimately is getting you very close, depending on whether you want to take it on log or not. You could probably take it off log, to be fair, as it is a smaller time frame. It's the bigger time frames you want to be using log on typically. But you can see this is taking you to round about here, which is going to run into this resistance over here. So the geometry with markets, technical analysis works. And if you look at that on a bigger time frame, that's going to really close that right shoulder for you. And we'll go up to the daily and ultimately look to see that broader continuation. We've used Injective as a good schematic for where we think altcoins are going. You know, you can see this. This is how markets go up and down. We've also used the Nikkei. We'll use the index. No, we won't. What do we want? Yeah, here we go. So markets will repeat in similar fashions. This is a really macro chart, but you can see the kind of structure that we're looking at. You know, history does repeat. Not perfectly, but it often looks very similar in regards to charting. So there's lots going on. The only real sort of worry I have isn't based on news headlines. Evergrande, you've got to remember, and just like with company earnings that are coming out, guys, it's likely going to be better than expected company earnings. Well, what's the stock market been doing? It's essentially been pricing that in and expecting that. You know, you can see the S&P, just like we had expected based on our macro reasoning on rates, has gone on and now put in a new high. You know, this is getting very close to our target for the S&P. Remember, we had targets for the NASDAQ that's already been hit and the likes of Microsoft. And you can see this is going up. So it's suggesting better than expected earnings. A lot of that will likely be priced in. So maybe you get a bit of a pullback on that. And remember, Bitcoin's looking to turn against the SPY and others, and certainly is already in an uptrend against a market that we think is going to do very well. Amazon was a stock that we've recently been highlighting as potentially taking a trip all the way up to $263. So what's crypto going to do during that time period? Or everything that we're looking at leads us to believe technical analysis on the dollar and roadmap for it, macro context, individual charts on their own technical merit ultimately leads us to be very bullish. And the last thing I want to kind of love and leave you on is the Treasury. So there's been no deviation from the plan. Data's rolling in that's supporting what we were looking at going into this week. The last thing I want to love and leave you on is the Treasury. So the Treasury have announced a marketable borrowing estimates. At what point do people wake up and understand that the taxation system in the US is all about impoverishment and it's not about paying or providing services, because they just print money out of basically thin air at this point? And this is how they usher in CBDCs basically, as they crash the current system that's totally unsustainable, and it's just turning into monopoly money at this point because of the debt that's being issued on the back end of it. There's no correlation between taxes that have continued to go up and the deficit and government, that money being used to be spent, because the deficit goes up with the taxes. So it's totally contradictory. And the fact that the government literally towards the end of last year, or the Treasury, essentially put $1 trillion worth of bonds into the market in like December, November alone. They're planning on doing basically the exact same thing at the start of this year, which again is likely going to lower the dollar, potentially, but also, yields are really something to watch, and the yield curve and everything, which we'll do a hell of a longer video on. If you want a video on how we essentially think they usher in CBDCs, let me know. But to kind of recap on everything that we've spoken about, because there's a lot that we're talking about here. That right shoulder for Bitcoin could potentially be in. We've got some smaller time frame confluence to add up to the broader time frame confluence. This is what we want to happen. And also the broader markets look to be supporting the narrative that we're promoting here. Ignore people that are still talking about crash. I know people that were bearish for the whole of 2023, are still bearish this year, and every reason for them being bearish has been invalidated, including the charts, which are ultimately the truth. And now they're coming up with complete nonsense about, who knows, the apocalypse. And it's like, well, hang on, nothing supports that. The data that we're getting doesn't support that macroeconomically, and neither do the charts. That's all I've got for you guys. I'm wishing you all a wonderful week. Hopefully you all have a triumphant Tuesday, and I will see you all in the next one. Thanks for watching, guys. See you in the next.